let me go across on the story on Wipro, because that's the big one. The IT bellwether has reported its first quarter numbers. Profit dropped by 7% but met estimates. Let me go across to Puneet on the review of the numbers.
But Wipro is in focus after the company reported their quarterly earnings. While the revenue was down roughly about 1.6%, we have seen the EBIT margin as well as net profit also fall by 6 to 9%. Now, in this particular quarter, it was expected to be weak, and the constant currency revenue growth has come in the middle of the management's guidance of 3.5 to 1.5% fall in revenues. Going forward, they are expecting some kind of positive momentum, and hence the quarter 2 guidance of -1 to +1% in terms of revenue is something that they've given. In terms of deal wins, it was a decent quarter in terms of deal wins, over $2.5 billion to $2.7 billion in terms of large deal wins. Now, and they've had 16 large deal wins in this particular quarter. But the concern largely remains on how the conversion happens from deal wins into the financial numbers, and that'll be one of the key ones to watch out for in the quarters to come by. But post this results and the guidance that the management has given in quarter 2, it affirms that the second half of the financial year will be crucial for Wipro to show any growth for FY26, and that'll be something to watch out for. One of the key aspects of the results and something that I came across was vendor consolidation that all of you spoke about in the press conference as well yesterday. In this aspect, what has been one of the key aspects to have several large deals as well as look at vendor consolidation as a theme, and what do you think, according to you, has been Wipro's strength in this aspect when the macro environment is so uncertain to actually be a biggest beneficiary of vendor consolidation? Because traditionally there has been some kind of weakness in that for Wipro, but with you coming in over the last year, what has changed which has benefited you specifically in vendor consolidation to start with?
So, Puneet, if you look at it, we called out consulting-led AI-powered Wipro. I think that's a strategy that we have adopted last year. Having said that, if you look at the mega deal wins that we've won, 2 of them were in the banking financial services and 1 of them was in the technology and communication. So what mattered to us and what mattered to the client is our understanding of their landscape, our understanding of their business, our understanding of where they want to go with the technology trends that's happening, especially with AI. So we brought in the consulting aspect of it, we brought the domain aspect of it, and more importantly, the solution is based on how the client was looking at and how they wanted to implement going forward. So all these factors really helped. Of course, our long-term partnership with them and the way we have delivered as well.
Well, the other one was deal wins, because we've seen that as one of the strengths in this quarter as well. Last quarter, you had the Phoenix deal win, a large one. This one, again, 16 large deal wins in this particular quarter. But in the last year also, you had $5 billion of deal wins. But that kind of translation into the financials, if has not happened, or maybe it's going to happen, and we're going to see that in the next couple of quarters. What factors do either of you see as that of those deals which you won last year? Because these ones are going to, of course, take some time, 4 to 6 quarters to come into numbers. Of the last 2 years, your deal wins actually has been very strong. But so what could be one of the key reasons where you're seeing those deals also take some time to ramp up to reflect in these near-term numbers that we've seen?
I think your question has some of the answers that I was looking for, Puneet. So number one is you talked about the Phoenix deal, right? While we announced it in quarter 4, we'll start executing that in quarter 3 because there's a lot of planning phase that happens. Also, some of the deals that we won now, it may take a quarter for us to ramp up and get to execution mode. Having said that, there are certain changes that happened, which I talked about in the last quarter results, wherein some of the large transformation programs the client actually put on hold because of the situations that they went through tariffs, and that was specifically in certain industry segment, which was around consumer and energy and EMR sectors. I think once those come back, once a situation certainty comes back, hopefully those transformation programs will kick in. But having said that, most important for us now are the deals that we have won. How do we execute on day one, and how do we deliver the value for the clients that we are committed to them?
So you had some deal wins in this particular quarter also in the weaker segments, first to say the retail, the consumer. Has that largely been shifted to cost takeouts or some new features that the client wants specifically? Has that change now happened?
Yeah. So if you look at our deal wins, there are a combination of both cost optimization, vendor consolidation. There are also some of the new programs that they want to start. For example, Aparna talked about the B2C opportunity, right? They want to see change the customer experience, especially the digital customer experience. So that's a new project or a program that particular retailer is starting to take off. Second, there are certain areas of the back office that they want to actually bring in agentic AI and transform their business process so that they get in the velocity and productivity and experience for their end customers as well. So it's a combination of both, Puneet.
And the one aspect also was, the capex of IT companies. You've had, a new dividend policy earlier this year, 70% distribution over the next 3 years of profit. So how does that align with your capex, which you have to do on new technology? Essentially, the incremental capital, which you say, and in finance we love to throw the term of sales to assets. Essentially, how will that? I'm sure that won't take a backseat, but how will that transform over the next, few years, maybe 3 years, since you have the dividend policy for that aspect, in terms of going into new areas, and what is the strategy for that?
Maybe Aparna, if you could.
Yeah, so we do have, even as we started the fiscal year, we're about $6.2 billion of gross cash. That has only improved in the first 3 months already. We had been generating consistently about 120% and upwards north of that in terms of net income. So cash flow generation has been robust, and we expect it to be robust even going forward. And we starting off on a very, very solid base of cash on the balance sheet, and that gave us the confidence to increase our capital allocation. And even while we've increased it, we made sure we have enough of a war chest to pursue both organic and inorganic investments. We feel very, very confident that we will be able to support this increased capital allocation and meet the strategic